Right. Is it on now? Recording? Right. Okay, it is on now. Right. So the job of financial institution is basically to channel the resources from one party to another party, right? So that's basically what we term as their intermediation function here. So the classic example of an institution that provide this intermediation role or function is banking institution, right? Because they basically take deposit from the depositors, right? Depositors who are basically the common household like us, right? Every month we receive salary, right? We receive or we receive return from our investment, right? So we have excess cash where we need to place the money in terms of the safekeeping, and also if we want to get an extra return out of it, right? So so common deposit account is basically where we place the money, right? So let me accept this first. So what bank does basically, they will take these resources, the money that we have deposited in our deposit account. So the banks will basically give out the money in terms of loans, right? In terms of then you have a different kind of loans. You have mortgages, you have uh, higher purchases, right? And you have personal financing, and basically these people need extra or insufficient of money to do their business, and also to basically cover their consumption, right? So they need more money, right? So that's the job of financial institution, basically, right? To link those with a capital and those who need a capital, right? So this is what we meant by intermediation here, right? And then, of course, there are different category of financial institution that we can classify based on their characteristic and also their function, right? So, for example, we can classify financial institution into depository institution, right? Depository institution is like any commercial banks, right? In Malaysia, you have Maybank, you have CIMB Bank, right? That take deposit from the people, right? So that and give returns to them, right? It's very like minimal amount of returns, right? Because basically they don't bear any risk on that. So this include any commercial banks and also credit union, right? Credit union is basically those are those who, I mean, wish attached to big corporation, right? For example, you work in a certain organization that they are big enough, they have their employee association, right? So this employee association or cooperative this is financial cooperative, will basically give out loans to their members, right? So if you are employee for the institution, you become members to that particular employee association, for example. So for example, you are employee to that organization and you need some cash to buy a house, for example. So rather than borrowing the money from the banks, you can basically go to this credit union, and then this credit union will say that we have that amount of resources that we can lend you that money, right? So that you can buy a house and whatnot, right? And also in some country, this credit union works in certain vicinity or certain community, right? If you I think particularly in the US, in the USA, they have like have so many credit union attached to different community, right? So because they have many states, they have many uh, basic community out there, right? So basically the function of this credit union is basically to provide those financing needs to those community members, right? So it can take that in that form as well, right? And then you have what we call as the contractual saving institution, right? What is the difference between depository and contractual saving is basically the obligation that they have to do as a depositor, right? So let me use this again. All right. So you have deposit taking institutions, right? These are basically the banks, the common banks that you know in the street, all right? And then you have those contractual saving, right? So, right. So these are like insurance company, right? The difference between this is basically in terms of the contribution that you make into the institution, right? So deposit you can do like anytime, right? You can deposit your money anytime at any amount of money, right? So let's say if you want to deposit $1 also can, right? You can deposit $10. You can deposit even thousands, right? Amount worth of money. You can do that. So it's up to you. So there's no obligation for you to deposit certain amount of money at certain amount of period of time, right? Is it clear? I mean, uh, uh, can you hear me or you? Is it okay? My voice is clear. It's okay, right?
Yes,
It is
doctor.
okay.
Okay. All right. Okay. I'm afraid I'm talking to myself, right? Okay. So and then what we have seen in the insurance company, there's actually obligation for you to pay every monthly, for example, or every weekly, right? This is basically an obligation for you to do that, right? You have to do that payment periodically, right? So, for example, if I take an insurance or worth that cover me up to 1 million, for example, right? Oh, sorry, what happened to the pen? All right. So if I take an insurance worth of 1 million, if anything happened to me, then I'll get, or my beneficiary will get compensated for $1 million, right? So let's say this will cover me up to my age of 60, right? So a couple of next, perhaps 20 to 30 years from now. So there will be obligation for me to pay what we call as the subscription fees. Like like in Takaful, for example, we have the contribution amount, right? Because in Takaful we use the different contract. We use tabaruk concept for contribution concept that works more like a cooperative. You will learn that later on. Don't worry. I'm just trying to distinguish between this deposit taking institution and the contractual having this institution, right? Another form of another type of contractual saving institution is basically those pension fund, right? So if you work in a government agency or even in the government sector as well, so you realize that your every month your salary will be deducted for a certain amount of money, and then this money will be saved or be kept in your basically your pension fund, right? Even if you work in the private sector as well, you have this EPF, right? The Employee Providence Fund, right? That if you reach to your retirement, and then you will be able to cash out all your savings, right? So those are basically savings, right? Your pension is basically your saving, but it's a contractual basis, right? On contractual basis, meaning that you have to contribute certain amount of money at every certain period of time, right? So that's the difference between deposit taking institution like banks, right? Where you can withdraw the money or you can deposit the money at any time that you want, right? Okay, so far clear between these two, right? And then we have the third one where we've seen many investment company falls into this category, right? Yeah, Mahmoud.
You were here, the contractual savings, you cannot deposit the time you want your money, the time, unlike the deposit one, the depository institutions.
Yeah, you can basically, right? For example, let's say I'm paying a takaful now, right? So I can pay for the next 1 year. I can pay in advance, right? But there will be a certain amount that are required for me to pay that amount. Unlike deposit taking institution, you don't have that kind of obligation, right?
Yes.
So that is different. But you can always pay in advance, right? It doesn't matter, right? But the difference is that there is no obligation for the depositors in the deposit-taking institution. So that's the difference there.
Okay.
Okay, right. So, and then you have the third group of financial institution consists of this investment company, right? This investment company, the job is similar like banks as well, where they basically take or they channel the resources from people with excess of money or liquidity, right? So this is like investment company, right? And then they have a different portfolio. They have a different investment portfolio that consists of bonds, stocks, and other funds, right? So they have a lot of investment portfolio here that are waiting for the money to come in. So their job, they perform the same intermediation role, right? But instead of giving out loans, right, they provide this access to investment opportunity that where these investors can generate returns from their capital or the money that they have invested, right? So that's the difference between investment company and lenders or banks that we seen earlier, right? Right. That's all I think we can discuss about financial institution for now, because I don't want to go into more details, right? So we go step by step, right? Like I promised earlier, we will see this type of components of financial markets or financial system later on, right? When we go one by one, right? So of course, I mentioned earlier, there's a need for proper governance of this institution and also markets, right? In order for us to achieve stability, right? Price stability, that's very important. Why I say that price stability is very important is to protect the welfare or the well-being or the interest of the common people like us, right? Because remember, we are just like common people who do daily jobs, right? We earn our salary, we spend some for our consumption, then we save some for our future use, right? So that's basically a common attributes of people like us, right? So if let's say if we invest uh, into markets where there is no stability, where the market is very unstable, right? So let's say if I save or if I invest the whole amount of the whole chunk of my disposable income after deducting my expenses and whatnot, right? So let's say I have 1,000 every month to be invest, right? That's quite a lot. I mean, in a Malaysian context, right? So if I have an excess of 1,000 that I can invest or I can put money in the markets, right? So let's say if we have the markets that are very unstable, right? So if I put 1,000 today, let's say I decided to let's say to purchase a bond or just put bonds, right? So if I decided to purchase a bond worth of 1,000, right? So if the market is very unstable and very volatile, right, so that this amount of money can go to a very low amount of money. Let's say the worth like suddenly change from 1,000 because at that time I purchased it for 1,000, right? So tomorrow morning when I wake up and then I look at my investment, the amount of money that suddenly dropped to $10, right? Let's say. Of course, this is very uncommon, right? Because what we have now, after several years of development in the markets, we have achieved some sort of stability there, right? Because we have the regulators, we have a different mechanism that actually can protect the interests that as for us as an investors, right? But let's say I just give you this hypothetical example, right? If we have the exposure to this kind of market where the prices of the assets is very volatile, right? It can go down to $10 and suddenly goes up to 100 and then it drop again, right? So So what happened to us, like for common people, all right? We'll be, you know, devastated by this, because basically we basically need those money, right? Let's say, for example, if I need it in the next month to cover my medical expenses, or to cover for my education, right? If I put that money into any institution, in any investment institution, or any financial institution, or that very volatile. So what happened to me, right? There will be a lot of uncertainty happen out there, right? I cannot be certain of my future even, right? So that can actually affect the welfare of the people, right? So that's the reason we need this, like, standard setting bodies, right, that have a different mandates. You will get to know more about them later on when you taking other courses as well. But one thing that you have to maybe at this point of time that you need to realize is that these standard setting bodies, what they're trying to achieve is basically to achieve a uniformity in terms of the practice in the markets, right? To certain level, right? I'm not saying that they're trying to achieve that the investment practice or the lending practice has to be the same for every banks, because different banks or different investment company have a different client or business focus, right? Some of them are focusing on small businesses, some of them focusing on public infrastructure, financing, and others, right? But at least you need to achieve this level of uniformity to a certain extent, again, for what? To achieve the stability that I mentioned earlier, right? At the end, to protect the interests of the people, the common people like us, right? That are very, very, very fragile, right? Very susceptible to these changes in the markets, right? These price changes in the markets. So you have, for example, I think you get to know this. You have the Bank for International Settlement, BIS. They have a Basel committee that are looking at the banking sectors specifically, right? And then you have IOSCO that oversee and supervise the capital markets. You have this IS, right? That are looking at the insurance markets, right? And then for Islamic financial system, we have this IFSB, Islamic Financial Services Board. I was there for 1 year. Like, so what the job of FSB is basically to come up with the regulation or the standards for Islamic banks that are complement to those standards produced by these three institutions, right? So Islamic financial stability will come up with their own standards, but this standard basically are in line with these three big organizations, but it just like they probably introduce some of the features that are needed for Islamic banks, right? Because of different requirement that we have in Islamic banks in terms of the Sharia compliance, right? We cannot engage in too much uncertainties, right? Gharar and so on, right? So there's a need for us to what we call as to incorporate those restriction, not so-called as restriction, but I would say it's a rather than it's a Sharia restriction that we have. Maybe restriction is too harsh words. Maybe the Sharia requirements, right? That's the word. That's the right word rather than restriction. That's a requirement for us, right? Because of our religious belief and whatnot, right? And then we also have IOFI. You heard this because they are very close into Sharia resolution. They have their own Sharia committee. They produce fatwas for Islamic banks, Islamic financial transaction. Right? They are actually accounting bodies, right? But along the time, you will see that their function have been evolved towards issuing these fatwas about Islamic banking and finance transaction, right? But initially, they were established to produce an accounting standard for Islamic banks, right? Okay. Any questions so far? I just give you a brief explanation about this. Of course, you need to do your own reading, right?
So the
What I
operating systems are the one giving the fatwas, right?
Yeah, the you have IOFI. Of course, you have other organization as well. Yeah.
Okay, their
Uh,
role is it only giving fatwa their role?
the fatwa what?
I mean, is it only giving fatwa is their only role they have in the?
No, no. They have two group of standard. They have accounting standard. They have a governance standard. They have many standards, right? And then
Okay,
also they have a Sharia standard as well, right? So they produce two, right?
okay,
Equality and Sharia standards, right? But you have to bear in mind that not all country use or take up this resolution or these standards, right? Because some country, like for example, in Malaysia, we have our own SAC by Bank Negara Sharia Advisory Council that sit on the central bank level, right? They produce their own resolution, right? Basically, Islamic banks in Malaysia are using that Sharia resolution, right? But for countries like some of the Arab country in the GCC country, they are subscribing to this Sharia standard and resolution produced by IOFI, right? They all because of this. Usually, there are small. Sometimes there is case of discrepancy between different in terms of the different resolution produced by IOFI and also at the central banks of different countries, right? So, but you always welcome those different opinion, right? And then you decide which one is can be useful for your institution, right? Okay.
right.
Okay, right. So that's just an introduction. Of course, I cannot cover this in one lecture. You need to read on your own, right? So what I give to you in the lecture is basically just a guide for you, right? So later on, when you have your free time, during your leisure time, perhaps you want to Google this more, right? You want to read about them more, right? There's a lot of information out there that you can access, right? Okay, right. And then apart from this international standard setting or regulatory body, right, we have the domestic one, right? We have the central banks that basically govern or supervise any financial activities or any financial investment that happen in the domestic markets, right? The aim is I think I've discussed earlier when I introduced to you the standard setting body. The objective, the ultimate objective again is to achieve the price stability, right? You don't want to have a very volatile markets, right? And certain central bank have that mandates to oversee and to manage the economic fluctuation in the markets throughout their monetary policy, right? For example, take Bank Negara Malaysia, Central Bank of Malaysia, right? So they can actually have an influence of this in terms of how they influence, let's say, in terms of keeping up the low level of inflation rate, right? So they can do that. They can have that influence in terms of, by basically having a decision on the interest rate, right? The overnight policy rates that has been used among banks, for example. You will get to know this more later on. Don't worry. I'm just giving you what we call as an introduction, right? Of course, we cannot explain. I mean everything here, right? But just for you to know is that this is basically the function of central banks, right? To achieve price stability and also to ensure that we have a stable economy, right? And to achieve economic growth, to keep the unemployment rate as low as possible, right? And also to achieve uh, low inflation, right? So they have this kind of monetary policy that they can use, right? Maybe you can read this further because I'm catching up with the time, right? So these are basically the monetary policy instrument, right? Statutory reserve requirement is basically the requirement imposed by the central bank to every individual banks, right? So at the end of every day, at the end of their business hours, right? These individual banks has to ensure that they have certain amount of money that have been deposited at central bank, right? This is basically a requirement by the central bank. Let's say, for example, I'm not sure in detail how much they require, right? But basically, each of the banks have to keep certain amount of money at central banks, right? At the end of their business operation every day, right? If they are lack of amount of money, then they have to borrow from the central banks, either from the central bank itself, or they can borrow from other banking partners, or not banking partners, from their competitors, right? From other banks, right? To ensure that they meet the lowest amount of reserve that they need to put at the central banks, right? So central bank can influence that by setting up the interest rate for this reserve that they have imposed on the individual banks, right? You will read more about this later on because if I want to explain, then we have to start from the beginning, right? Try to find an article about this, right? About open market operations is something that related to statutory reserve requirement, right? This is the interest rate, the discount rate I mentioned to you, right? The central bank can dictate how much is the cost for one bank to borrow from another bank in the case of they have insufficient funds, right? Because remember, the job of the bank is basically to not just to provide the loans to those who need their money or the capital, but also they have to meet the demand from the depositors, right? Because at the end, every day there always the depositors who withdrawing the money, right? So they have to ensure that there will be enough liquidity to meet this demand, right? So that there will be no lack of liquidity or lack of cash to give out as a loan, and also for the withdrawal of money, right? So this is basically how central banks influence the markets, right? Because at the end, this discount rate imposed by the central bank will be transferred. The cost will be transferred to the lending, like the lending that banks give out to the client. Like, for example, if I can draw it up here, right? But I have to go very fast, right? So let's say you have a central bank here, right? And then you have banks, like individual banks here. And then you have a borrower, right? Right? So this is money out, right? And then you have money in, somebody who basically the depositors, right? And the depositor can also do the withdrawal as well, right? And then these borrowers can do the repayment as well, right? Right? So this is basically how the system works, right? So at the end, central bank will impose certain discount rate, right? I just write rather than use the discount rate. So meaning that if banks have a short of liquidity, right, to fulfill the obligation to the depositors in terms of the withdrawal, and also they need some cash to give out as a loan to borrowers. So banks basically have two options, right? Either they can borrow from other banks in the town, right? They have other competitors, although they can borrow directly from the central banks, right? So let's say the central banks, I just give you an example, right? So let's say banks say that if you want to borrow, then I will charge 5%, right? So what happened is that, you remember, banks are just intermediation, right? So how they make profit is that this is basically the cost to them, right? So the depositors, sorry, not depositors, right? When they want to give out the cash as a loan to borrowers, right, they will charge the borrowers some interest rate as well, right? So this lending rate could be like, for example, 6%, right? So what is the profit for the banks? Is basically the 1%, right? So bank will ensure that they are profitable, right? So because meaning that they have to charge the borrower higher than the cost of borrowing. What is the cost of borrowing or cost of fund to them is basically this 5%, right? So if central banks, for example, want to encourage spending in the markets, right? So for example, let's now put in the what we call as in the downturn economy, right? When people are have lack of tendency to spend because they have lack of cash, right? For example, because they don't have cash to spend, right? So economy is going very bad at the moment, right? And then the government throughout the central banks will need to will need to spark the consumption, right? We need to encourage the consumption in the markets, right? So what we'll do is basically they will reduce the discount rate, right? This is basically the money policy that they have, right? They will reduce the discount rate in order for banks, these individual banks, will reduce the cost with the hope that these banks will reduce the lending rate to their customer as well, right? So if there is a low cost of borrowing here for the borrowers, what happens is that the borrowers will borrow more money, right? The borrowers will borrow a lot of more money because it's cheaper to borrow now as previously when the lending rate is a bit higher, right? So they borrow more money, then with the hope that this higher borrowed amount of money will be translated into higher consumption, right? And then you will see that with the higher consumption, the economy will start growing up, right? So that's how, just one basic example, like how central banks can have an influence on the economic sectors throughout their monetary policy that they impose on the individual banks. Am I making sense so far? Is it clear or is it too? Because I don't want to put it. I try to put it as simple as possible for you to understand, right? Because and later you can find out more about this monetary policy. Any questions so far? Is this example clear for you, or you're not happy with the?
Yes,
If you're not happy, then I can explain it further. Is it okay so far? Any question?
Okay. Question is it that the central bank gets some benefit from the other banks that borrow money from
Yeah. Central banks, you can download their annual report as well. They are making like a return as well, because at the end they need, as an institution, they have an expenditure to make, and then some if you realize that they also have certain financial initiative as well, because central banks basically can use the money, the funds that they generated to give out to banks, right? So they said to the banks, we have this extra cash, so please use this cash to lend out to, let's say, for small businesses who need the money, right? But the objective of central banks might be different from banks, right? Because banks, they are profit-making institution, they are profit-driven institution, right? So perhaps they don't really want to give the money to small businesses, right? Because these small businesses are very risky, right? They don't have a proper accounting records, so they are cash inflow are very uncertain, right? So banks, especially the large banks, prefer to lend to those big companies, right? Like wealthy individuals,
Yes,
which this is very less risky. So there's a job. There is a job for central banks to provide financial access to those who are underserved, which is this small company, small businesses, right?
yes.
People who don't have.
If I understand you, is that the central bank can borrow to some lowest companies.
Central bank can borrow what? Come again?
Can
From
borrow
low.
money. Central bank can borrow money to the lowest companies that have high risk.
Not borrow. They give the money
Out.
for people to borrow from them, right? But throughout the bank, right? You cannot suddenly go to the central bank tomorrow morning and then knock their door.
Individually, you cannot
Yeah,
go to the yes.
yeah. You have to approach the banks, right? For example, recently in Malaysia, particularly, right, during the COVID or 19, during
Yes.
the lockdown that we have,
Yes.
right? So suddenly all these small business lack of cash, right? Because they basically their business was shut down, right? They cannot
Yes.
have money to sustain to pay their employee and whatnots, right?
Yes.
So central bank have provided like these funds for individual banks, for the commercial banks, to channel the money, the funds to those small businesses, right? So that they can sustain their operation and whatnot, right?
Central bank can give out the money to other banks, and the other banks can
Yeah,
channel
yeah,
the money.
yeah.
Yes. Thank you.
So another way is that rather than borrowing directly from central banks, banks can also borrow from other banks, right? This is where I mentioned to you earlier the existence of the money market. Remember? Money markets that is very short term in nature, right? Meaning that I could borrow today and then I pay you back tomorrow, right? Or it can happen in the same day as well, right? So this is the job of money market, where they offer this kind of instrument so that banks can provide the either resources to other banks so that the other banks can give out for loans or to honor the withdrawals, right? So how central banks impose their or have their influence over this lending between banks, interbank lending is basically they will impose the interbanks through the interbanks rates, right? They have certain amount of rate that they say that if you want to have this interbank transaction, interbank lending, you have to charge certain amount of money as well. So that's how they have the influence over the lending markets, right? So let me just proceed. We don't have much time, to be honest. Right. So far, so good. So far, clear. That's how basically central banks play a role. And so of course, if you are interested, you can read more about this, right? Okay. Nias, you want to say something, or you?
No, it's okay. Thank you.
All right. Okay. All right. So again, let's put all these components together, right? And then together they form an financial ecosystem, right? That allow us to borrow money, to invest money, right? And to have a saving as well, right? So one of the way that how this financing or lending take place is through direct finance, right? Meaning that if I have an excess of certain amount of money, I gave an example earlier, right? So I can go directly to the markets, right? Nowadays, this become more accessible, right? Because we have all these mobile apps, we can have this online platform and whatnot, right? So people have a more direct access to the markets now. So meaning that I don't need a third party. I don't need banks. I don't need other investment managers that will help me to allocate my invested money. I can do it by myself, right? Nowadays they have this robo advisor. Have you heard about robo advisors, right? The robo advisor is basically they claim they use it artificial intelligence, right? So let's say you inform the robo advisor about your preference, your investment preference, and to what extent that you want to bear the risk, right? Your risk tolerance level and whatsoever, right? And then this robo advisor will be able to suggest to you some investment opportunity or platform that you can use, right? That suit your investment level and tolerance, right? So you can do that as well. Nowadays is possible, right? It's becoming more possible for you to have this direct finance or direct investment, right? So this is how they take place, right? So this is people with excess of money, right? So they can just go to financial market directly, having a direct exposure to the financial markets, go to the counter or go to the virtual platform, and then they can pick their investment options that they want, right? And then just right away put the money in, right? And the second ways is basically through the financial intermediation, right? Or what we call as the indirect finance or investment here, right? Where you need a third party like banks, for example, or investment company, mutual funds, right? That basically have better information than you, right? As a common or as a retail investors like us, like we basically are less exposed to the markets, right? Sometimes you learn like myself, right? I mean, I learn finance and banking, right? But I don't have experience and exposure in the real investment markets, right? If you give me money to invest, I probably I'll be the worst person that can give you advice, because basically I don't deal with the markets every day, right? These people probably have a very less theoretical knowledge about finance, but they are dealing with the market every day, right? They don't need a formal degree of finance, right? Basically, this is their daily job, right? They help you to advise you on how you can grow the money, and basically they get a fees out of it, right? That is basically what banks does. Right? This is what we call as a indirect finance, sorry, right? So that's basically how the market works. Any questions so far? I mean, you have that you have particularly that you want to ask up to this point? Anything is not clear to you? Okay. Sundus, are you okay? Munira, are you okay? You guys been quiet? Am I making sense or?
Okay.
Okay. All right. So perhaps another perhaps I didn't discuss with you earlier, right? So we can further understand the markets by looking at whether they are informal financial sectors, or they can be an informal financial sectors, right? What I mean by formal financial sectors or financial markets is those who are basically present or basically are governed by the existing regulation, right? So meaning that if you're operating a banks, you need a license from the central banks, right? And before you can take the deposit from the public, right? So, and then if you are investment company, you need certain license for you to be operated, right? To get to pull the money from the investors and then invest in different portfolio, right? So that's basically a formal financial. I mean, the institution that exists in the formal financial markets, right? But there are other part or other segment of financial markets where what we call as the informal financial sectors, right? Basically, those who cannot be captured by the regulation or by the governance system that we have, right? This is what we call as the shadow banking, right? It's very interesting for you to read about shadow banking, what we call it as, right? For example, I'll give you an example, right? If you go to the nearest, I'm not sure, supermarket here. Have you been to, let's say, for example, have you been to Aeon Market? Aeon Supermarket, is it Aeon Supermarket? Aeon Mall, right? This is basically a company from Japan. Have you, do you guys know Aeon Mall? I'm not sure whether there is one in Gombak or not, right? So Aeon, this Aeon company basically provide a credit to their customer, right? If you go shopping with them, basically there will be promoters who ask you whether you want to subscribe to their credit program or not, right? Where you can basically buy the goods and other items on credit, right? Meaning that you don't have to pay now, but you can use their I think they issue cards as well, right? So they are not deposit taking company, right? They are not banks, right? But they issue this so-called as credit as well, right? This amount of credit or money have been issued by this, for example, shopping or retail companies was not captured under the same regulation that has been imposed to banks, for example, right? But they do to a certain level a same function, which is giving out the credit to the customer. Who are this customer? Is basically the household, right? So these are basically the shadow banking that they try. I mean that we try to understand, but it's very difficult for us to capture the information about them. Unlike because they are basically work in a different type of industry all over, different than the banking or financial sectors, right? Financial industries, right? And then you've seen that with the presence of this high-tech company, right? Let's say, for example, Apple, we have other company as well, Amazon, right? They are not financial companies, right? In nature, I mean, they are providing these technologies, they're selling gadgets, right? But you've seen that now they are becoming more present in the financial environment, right? Where you can use they provide services as well. Like Samsung, they have Samsung, what you call it, Samsung Pay or something. Like you have Apple Pay as well, right? So they are taking the role of the traditional financial institution that we have in the last several years, right? So now banks and other financial institutions are facing competition not among themselves, but they're also facing the competition from other companies from different industries, right? So this is the situation that they have, that this these banks have to deal with, right? So you're talking about digital banks now, right? People are talking about digital banks. Digital bank does not need a physical branch to be available, right? Because they can now, like I mentioned earlier, for example, in the UK, they have a lot of digital banks registered now, right? Because they can basically, I mean, their customer can basically open the deposit account virtually, right? They don't need to be, you don't need to go to banks, to fill the forms and then bring your cash to deposit the money like the old days, right? Yeah. So the environment, the financial environment nowadays is becoming more complex, right? With the presence of this traditionally non-financial companies, but becoming more present and more important in the financial markets nowadays, right? That's perhaps that's the thing that you should be aware as well, right? But at the same time, you realize that what would happen to the traditional banks, right? Like common commercial banks that we have, like CIMB, Maybank, right? In your country, I'm not sure in Kenya what are the banks that you have. In Saudi, perhaps you have the Al-Rajhi Bank, right? So what they will do in facing this type of competition, right? So so like it or not, they have to adapt with the situation, right? They have to be more advanced and be more creative in facing those competition, right? So you will see now, if I can share with you, so now banks, like commercial banks, those traditional banks, who basically previously what they do is basically just giving out loans, right? Taking deposit, give out loan, right? So that's basically what they did in the past, right? So but now they have to be more advanced in terms of they need to be exposed in the real economic sector as well. I give you an example of this bank by the name of Lloyd. I'm not sure how you pronounce this. I think it's LLYOD. Banks in the UK, right? So as you know, the job of the bank is basically to provide mortgage, right? They give money, and then a customer will use the money to buy the house, right? Their selected house, right? But what Lloyd Bank does now is slightly different, right? Where they enter into the real residential market, real property markets, right? Where they purchase several houses, right? And then they lend or they rent out the house to their customer, right? So meaning that, see, this is basically a paradigm shift to this bank, right? Because instead of doing intermediation, now they become a business partner in the property development markets, right? Where they own the assets rather than giving out the loans or whatnot, right? So they actually buy and bear the risk of these these residential properties, and then they get the return not throughout their loans, but basically throughout the rental, right? So you see that these traditional banks have to innovate, right? They like it or not, they have to do that. Otherwise, they will get kicked out by those financial technology company, right? Apple and whatnot, because they are way more advanced in terms of the technology, right? And recently, before I finish, let me just put this. I think we can finish the remaining in the next week class, right? Before I conclude, I just want to give you an example. Recently, I just read the news. Maybank. For locals, I think Maybanks, right? So Maybank is a bank. I mean, it's a traditional bank. It's a commercial bank, right? But now I think they realize that they have been providing their payment system to those technology company like Food Panda. We have Shopee here, right? These are basically the e-commerce company, right? Who use their payment platform to deal with the customers, right? So now what Maybank try to get into is basically they try to get into the food delivery business as well, right? Because they realize that why would not we use our own platform to make money for ourselves rather than give the services to those technology company, right? So they have this I'm not sure what is it called, the company, right? Is it Summer Local? Is it Sama Local or something like that, where they also provide the food delivery services, right? For those who are not, who are very alien to Malaysian markets, right? We have here Food Panda. We have, it's like, I'm not sure. We have Grab as well, right? This is like Uber companies, like but that fits but operates in a Southeast Asian markets, right? So you will see that these traditional banks have to innovate, right? Otherwise, they will get, you will get, kicked out of the competition by those fintech companies, right? Soon you will see that this environment will evolve. Big time from now, right? I think we can stop here. I'm too tired talking. So, anyone have a question that you want to ask?
I have a question, please.
Yes.
If the Maybank starts business like this, so have they already started?
Yeah, they started. I saw some, but not so many. But I think they started small. You know what?
Yes.
You
So are
know
they
what?
able to compete with the Grab or Foodpanda?
I think that they are looking towards that. To be honest, right? Because they realize that like they have this so-called as their mobile apps, the Maybank apps and whatnot, right? So because these banks have information about the customers, right? These users of those food delivery company are basically their customers, right? They are depositors who have account with Maybank, for example, right? But they use the another party apps, for example, Foodpanda or Grab, right? And then make the purchase from there, right? So banks realize that we should utilize this information that we have about our own customer, right? And then we can have our own platform. I've seen that you can actually buy from their Maybank apps, right? That they have mobile apps that they have, right? So not just they can get from the fees, the payment fees, but they also can make a profit out of it, right? So that's another source of income to them, right? Because they realize that throughout the time they cannot rely on the normal intermediation or lending activities just by itself, right? They need to have another variety or diversity in terms of where they can get their income from, right? So you look at this proportion of non-interest income, right? Non-lending income from the bank is getting bigger and bigger every year. That's a good study if you want to do on that, right? Yeah. So that's basically about that. I mean, you can look at other example as well, not just in UK or in Malaysia. I think all of banks start to realize this, right? They have to adapt and they have to adapt and they have to innovate. There's no choice for them, right?
Right. Thank you.
Okay. Any other question before we end? I think next class we finish with this 5 core principle, and then we start the second topic on the money, right? I think it's a money and payment system. I think on the second topics. Anyone have a question so far? If you want to discuss.
So, is there any other sources that we go and research for?
I don't hear you clearly. Come again, Mahmoud?
What I mean is sources, so that we can go and research more about.
Oh, I mean the textbook that I gave it to you is quite what we call it, it's a quite academic in the nature, right? So you will, because the objective is the same as is my objective, which is to introduce to you the fundamental things first, right? Rather than looking at the new things, right? You need to understand this, for example, this principle of money and banking, the fundamental aspect first, before you try to look at the new innovation in the markets, right? But
this is my first class, so that's why I ask.
Yeah. There will be a textbook for you. You can read from the textbook, or you can always go to the financial magazine that I suggest to you: Financial Times, The Economist, Harvard Business Review, the Stanford Social Innovation Review. All right, you can look at the MIT magazine. Right? We have that as well. Right.
Okay.
So don't limit your pursuit of knowledge just within the class like this, right? Because
Yes.
it's not sufficient. 3 hours per week is not sufficient for you to, if you want to increase your knowledge in finance, especially if you are new to finance, right?
Yes. Yes.
Because I think all of you are from different background, right?
Yes.
So if you want to expedite the process of getting to know about financial markets, you need to invest the hours, right? You need to read the books. Right? I think I suggest to you about the books, right? Cannot see here. I mean the name of the books, right? Because throughout reading the books, you'll be exposed to certain events and certain instrument that will trigger you to read more about them, right? So what I can give to you in the class is basically just a direction for you, right? I just a facilitator here, right? That help you in terms of in doing your readings, because at the end you need to spend your own time reading, right? Okay. If we have any questions, Sundus, Bailo, Munira, are you okay so far? Okay.
Yeah, I'm good.
Okay, all right. So propose to me your selected article for the article review. Yeah. So for your information, Mahmoud, because you just joined, we have one. You have one article review assignment with me that worth 30%. Yeah. You can read it from the Microsoft team. I think you need to get the live account as soon as possible for you to access the Microsoft team class, right? And then there will be another 30% from the second lecturer that will come in after the second half of the semester. And then there will be 60%, sorry, is it 60? Sorry, 40% of final exam, right? Final assessment. So for me, you need to do the article review. I think I shared the assignment document with you. You can read. I think it's a self-explanatory for you. You just need to select article and then propose to me first, right? I think Sundos, you can. I think there's no problem. You can proceed with your selected article. There's no problem. Bailo try to get more.
Send it for you today, teacher.
Sorry.
I sent it for you today. Have you seen?
Yeah. The Emerald, right? The academic article, right?
Yeah. Is it okay?
I haven't read yet, but I will get back to you later. I think there's no problem. Looking at the title and the abstract, I think you can do it, right? Because it's not that technical paper. You should be able to do it. But it's just like academic paper. Academic paper is quite lengthy, right? There's more for you to discuss. No problem, right? But I'll get back to you to confirm on that.
But for me, I
Okay.
think before I have the access to the live, I have to write that EPT before I have the access to the live account.
Oh,
Yes.
okay. So don't worry. I can share with you the assignment document through WhatsApp, right?
Okay. Thank you, sir.
All right. Okay.
Thank you.
So for the rest of
Doctor,
you,
you said that you will share the a copy of the article.
yeah.
to
For
us.
just to give you an example, right? How
Yeah.
the quality of the article that you should select, right? Because you need to
Yeah.
find the one who have the argument and whatnot. The one that you proposed to
Okay.
me by law is a news basically, right? So there's not
Yes, I
much
understand.
you can argue about that, right? Okay.
Okay.
So thank you everyone for listening today. But I hopefully I can initiate more discussion in the next class. I know that I tend to talk a lot about the topics, but you can always ask a question, right? So from your question, then we can have more discussion, because sometimes I forgot to ask you a question, right? Because I got carried away with the content of the lecture, right? But you can always stop me and then ask me a question. That would be better for our discussion, right? Okay, so I think I take a lot of time, right? So I'll see you next week, inshallah. Right?
There is any system for giving attendance?
I usually keep the attendance in the Microsoft team. Nias.
Okay.
I don't have the, because you need that, right? You need the
attendance. Yes.
but can you check with the office if the attendance from the Microsoft team can be can be accepted in your case?
Actually, I'm not sure about the process. How you give the result, or how you give the
So
report.
I'm not sure either, because this is my first time have the student auditing the class.
Okay.
So you ask them if there is a need for to create attendance or something. I think they have I attend registration.
Madam Zaria used to give us attendance in the iMalum system.
Yeah, the iMaklum. I don't use that that system. But if you ask them if you need that, then I will ask.
If you have the record, that would be enough in any way. Actually.
Yeah, I have the record in the
that would
Microsoft
be
thing.
enough.
Yeah,
that would be enough.
yeah. Okay, all right. Okay, so you can watch this recording again if you want to do that. I mean, you can click on the Microsoft team. All right. Okay, I think I'll see you in the next class, inshallah. All right. Okay. Assalamualaikum. Take care. Salam, bro.